Hello and good evening. This is Ferre, and I'm sitting here next to Stephen Swenson, and we just want to welcome you out to this tax sale training webinar for all of you. We're happy to have you take the time to join us tonight live, or for anybody that happens to be catching it by replay.
Yeah, definitely. We appreciate you being here with us this evening. And we try to do these trainings every month or so, to some of our YouTube subscribers and to people on our newsletter list, just to let you guys know about tax sale investing and talk about different aspects of tax lien and deeds.
Yeah, well, and I think it's also worth noting too that kind of how we feel about information in general, because you might notice that we don't really hide or hold back a lot of information, and that's because that's never really been it's never really the factor, that leads to being successful. It's not really about the information, it's about what people do with it.
Yeah, absolutely. And so tonight we're going to be talking about the 10 steps to tax sale investing, kind of taking you through that 10-step process.
Yeah. And I think there are some reasons for that. 2020 has been a crazy year in so many different ways, but a lot of what that has done, though, we think is going to end up resulting in, probably one excellent 2021.
Yeah, absolutely. I mean, as far as the National Tax Lien Association, they said in 2019 there were over $15 billion in properties that went into default because of unpaid property taxes. And so because of the COVID virus and what's happened for 2021, it's going to be over 20 billion.
That's crazy. That's a huge jump.
Yeah.
I mean, that's a massive jump in size, and what that should hopefully also mean, an increase in 5 billion properties there. That's pretty crazy.
Yeah, exactly. $5 billion worth. And so there's going to be a lot of extra tax lien and deed opportunities. And one thing that's happened over 2020 is a lot of counties have not been able to hold their tax sale auctions. A lot of them held live auctions and weren't able to hold the auctions. And so that means that there's a lot of unsold property.
Yeah, in fact, we didn't really hear a lot about the canceled sales, but what we did know, was that lots of county governments, shut down for a while, and all of those that relied on live sales were really in a pickle for the last, especially depending on which state they're in right now. They've been in a real pickle here about what they should do with their auctions, because that is the enforcement mechanism, for property taxes. It's when the tax sale happens and properties can be foreclosed on, or if we're talking about liens. Either way, it's a part of the system there that they need to work. And so, yeah, a lot of them did just not even do it, and there's got to be a buildup. There's got to be a backlog of properties there, and it sounds like there is, and maybe even more.
Yeah, well, definitely. In certain states, they didn't even have their 2020 auctions. And so, next year there's going to be double the opportunity, but also we've seen less competition than in years past. And so because of the less competition, we think that with more opportunity in properties available and less competition, really 2021 can be a great year for tax lien and deed investing.
Yeah, absolutely. And by the way, these are always recorded. We always are going to make sure that we record these webinars, and so if you're registered for it, you'll always get replays for it.
Yeah, we'll be posting it on YouTube, on Facebook, and then we'll also send it out to our newsletter list.
Yeah, we've got a few examples kind of mixed in here with some of the slides, that we can go over that are just, just member deals or coaching student deals, and just because they illustrate exactly how it all works.
Yeah, exactly. I mean, this is just a piece of property that was picked up on over-the-counter list. Now, it was a higher priced property, had a higher value, so he picked it up for $30,000. But he actually got an offer quickly after buying it, and had somebody contact him and said, hey, I understand you purchased this property. I'll go ahead and give you $80,000 for it, which is going to give him a $50,000 return. Now, he would have had to gone through a lot of work and spent a lot more money on this property to get maybe a little bit more than that. So at this point, he was able to just sell it quickly and make a good $50,000 extra.
Yeah, it's true. I think what the best action to take with the investment really is going to probably depend on each circumstance. In this case, there were, it was a pretty valuable property, and so there was a lot owed in property. I mean, property taxes alone were like $12,000 a year. That was a big factor into it. But also the guy that he was contacted by, he wanted to personally put his property there, so he was invested into. I mean, he had already done the research on this property, knew exactly what it needed. He wanted to build his own house there, and so he had done the research and actually was able to give this guy a lot of information about the property. But it was obvious that he was going to be the best person to hang on to the property long term. Just because it would have cost so much money and taken a long time. You would have been pretty committed to it, and you wouldn't necessarily make much more money.
Yeah, definitely. It was the best deal. Especially if he can go ahead and get that property sold, and now he's got $80,000 more that he can go out and put back into the market.
Yeah.
Another thing that we've seen is with the news about the vaccine. There's been some changes even in the markets and in the real estate market as well.
Yeah, in fact, I think that some of the country's biggest property owners, their share prices jumped up with it. I think there's a lot of optimism in real estate. Is always going to be one of the best investments, and it's reflected, I think, in people looking for that safer investment.
Yeah, well, I mean, the Wall Street Journal, they reported as far as the vaccine news that, like you said, that the largest property owners in the country, their stock went up by 20% compared to only 3% for the Dow Jones. And so as far as an investment with real estate, they were able to get quite a big return there, which shows that the investors see the markets as being favorable. Yeah,
well, I think a lot of people are going to be flocking to real estate investments.
Yeah.
I mean, they're going to be looking for things they can put their money into that are going to be physical, like real estate, and offer the kind of returns that real estate does.
Yeah, absolutely. Now, this is just another testimonial from some of our students, Jim and Drew, and we won't go through the entire testimonial, but you can see here that they purchased real estate valued at $293,000 for only $17,258.
And that is always impressive. Whenever we read that, that's absolutely what you can do, and something that's possible if you are, depending on where you're at and where you're investing. But you can definitely find opportunities to acquire properties for incredibly low prices and less than taxes owed sometimes.
Yeah, and they were buying these properties all over the country, and most of these properties have sold now, from when this was written.
Yeah.
At least a lot of them.
Yeah, it's true. There we go.
Here's just a few more real estate headlines with, positive real estate news over the last week or two, where you can see home construction's up. This September home sales climbed by 9.4%, which was the highest since 2006.
Yeah. Well, the market, it certainly seems to be doing really well, and I think that timing-wise, I think things. I mean, it's just rearing to go, I think.
Yeah. Well, and even economists are optimistic because the unemployment rate has fallen to 6.9%. And then Keller Williams reported a 25% increase in their third quarter volume. So, they're one of the biggest real estate, companies. So there's definitely positive things. And this is part of the reason why we think it's going to be a pretty good year.
Yeah. Everything is shaping out. The 2021 should be a year that has ton of tax sales and an abundance of inventory, a backlog of inventory, 18 months or 2 years worth of inventory to offer during that time.
Yeah, and like we mentioned before, we've seen less competition in a lot of the online sales and some
Yeah,
of the auctions.
that actually is another good point, is that there's been a noticeable drop in the amount of competition that you're facing directly with the online auctions. And the online auctions are where you're going to find some of your best tax sale properties. And there are, online auctions that happen around the country. But, a year ago, if you were looking at a lot, many of the online auctions, the competition and what it's going to cost you to get a property can vary from place to place. But in a lot of places, if the competition levels get up where people are paying, they're paying 70, 80% on the dollar or higher, for properties, it's just ridiculous. There's no reason to buy it.
Yeah.
And what we've actually seen has been more of things getting back to more reasonable levels.
Yeah, absolutely. Here's just another member tax deed. They picked up a nice building lot for $1,600, valued at $24,000. So, when you're picking up land like that, 10, 15 cents on the dollar, sometimes less, sometimes more, there's a lot of opportunity in these land deals.
Yeah, especially if you are open in how you sell it.
Yeah.
Selling it, I think, the right way is really important. But a lot of this comes down to due diligence, and we get questions about that all the time. People ask us sometimes, what due diligence is exactly, and how it works, or how much due diligence you need to do before you can make an investment decision on a property.
Yeah, absolutely. It's probably one of the number one type of questions we get on our YouTube page. And so that's something we want to go through tonight. We want to take you through those due diligence steps. And the process of due diligence, or how much you do on due diligence, I guess which should say, is going to depend on the investment in your strategy.
Yeah. We always want the due diligence that we're doing to be reflective of the amount of money that we're investing. Okay, so in other words, we want to invest larger amounts of time to, and maybe set higher bars for the research that we're performing as the amount of money that we're investing goes up, because obviously it's just common sense. As our risk goes up, we need to be more worried about it. But if you can acquire a property that looks like it has great use and value, and it's going to cost you $300 or $500 or whatever that price is, that's it's hard to see that as even a risk.
Yeah, well, and something like tax deed investing is going to require a lot more research than tax liens.
Yeah, absolutely. In fact, tax liens, a lot of times you can, because 95+% of them, redeem, you can buy tax liens with a fairly limited amount of research, as long as you can verify really a few things about it. But with tax deeds, though, you're buying properties, so you've got to know what you're buying.
Yeah, now the first step of due diligence is going to be education. It's really one of the most important things is knowing what you need to know so that you can invest properly.
Yeah, it's easy to make mistakes, especially if you just charge in.
Yeah.
You're bound to learn through trial and error.
Yeah, absolutely. So we're going to take you through these 10 steps. We haven't listed here, but we'll actually take you step by step through each one of them.
Yeah, and this is also going off of the assumption that you are investing in an area for the first time.
Yeah.
So if you're looking to invest into an area for the first time, then one of the things you need to figure out and understand right off the bat is exactly how their property tax system works, and what some of the what the outlines of it are. And to do that, we need to get into these state laws.
Yeah, absolutely. It's going to be the first state, really the first step. And so if we're investing within that state, we have invested within that state, then we want to find out how that state works. And so one way you can do that is to look up the state law and code. You can also research online and find out what you can find about how that works. Now, members of our website, of our membership program, we have all of our state guides there that kind of outline how each one of those states work as well.
Yeah, they have an overview of how each state works, and we can kind of break them down from there. But we need to know first off, how we need to know how the state operates and works. If we have a sale from there, we need to find it and figure out, what the sale rules are.
Yeah, this is going to be a real important one, is to find out exactly what needs to be required in the auction rules. And so that can,
Yeah, in fact, yeah, before you participate in any auction, you have to go through all of the rules that they provide and many of the pamphlets, because it's going to provide all the information that you most likely are going to have questions about later on. And a lot of the information can be relevant to what you, I mean, in fact, you may need to take, you may need to take steps or measures just to participate in this auction, and it may be time sensitive. There are 100 different reasons why you want to go through and be specific, read through all of the instructions for the auction.
yeah, absolutely. I mean, things like deposits, how much you need to do a deposit, even how the payments need to be made. All of those things are going to be there within the auction rules, and you're going to want to go through each one of them before participating in the auction.
Yeah. In fact, a lot of the online auction companies, you can practice your way, with some of them. It's a good idea just to get familiar with how all of it works.
Well, and there may be additional fees or something like that that you want, that it's going to be within the rules, and document fees, something like that you're going to want to find out, so that you include that as a cost when you're figuring out how much you're spending.
Yeah, that's actually a good point. Especially if you're investing limited amounts of capital, because you don't want to get surprised by a $500 fee suddenly, that you weren't really thinking about or considering, or it could be even higher. And Steve's right about that. You need to know how much it is, so that when you are looking at potential investments, you can account for that cost. So that you're not suddenly trying to absorb it somewhere. If the county is going to put a $500 fee, on top of whatever it is you do, then you'll have to kind of build that into the investment.
Yeah, and they're not always going to have that, but it's something you want to check.
Yeah, absolutely.
Step 3 is to locate the county websites. And so this can be done by going to Google and typing in the county website. But this is really going to be one of the most important steps that we're going to go through at the beginning of doing the research.
Yeah, we need to be able to access the county website, and from there, what we need to access specifically are their online records. So that's really what we're looking for when we go to county websites. But there are really a handful of offices that we'll end up dealing with for the majority of the searches that we are going to do. Because generally when we go to a county website, we're going to there for specific reasons. They were looking to look up records about properties that we're looking at on a list. Maybe we are, maybe we're going there to find the list.
Yeah, well, the county website's where we're going to really go for everything. Like you mentioned, it's where we're going to find the tax sale list. It's where we're going to research the tax records, the assessor records, the court records. It's really where we're going to do a bulk of our tax sale research. And really, there's 3 main departments that we're going to research in the county website.
Yeah, they are the assessor's office, or in some places it might be called the appraiser, but it's generally the same thing, assessor or appraiser. Then there's also the recorder's office, and then the treasurer's office or tax collector's office.
Yeah, absolutely. And so we're going to go through and research each one of them. In fact, step 4 is to research those treasurer records.
Yeah, well, and it's because we need the records from each one of these departments in order to determine what it is that we're looking at. If we're looking at the assessor records, then we're looking at the property assessment and everything that's related to how the property itself is valued and assessed. If we're looking at the treasurer's records, that's going to be everything related to what's been paid in property taxes and what that property tax history is. So depending on what kind of investment, for instance, let's say we're buying liens and we want to know if there's roll-up. We're probably going to be looking into the treasurer's office and tax histories. If we're trying to validate and figure out what a property is, we're probably going to be in the assessor's records. But if we're trying to dig into the history of the property or figure out anything about liens, we're probably going to be in the recorder's office.
Yeah, absolutely. So as far as researching the treasurer records, this is where we're going to get a lot of our information. So this is usually where we're going to find the tax sale list, any type of rules as far as the auctions. Also this is where we're going to go for any of the tax records.
Yeah, it's because a lot of times they're going to be the office responsible for the sale. That isn't always the case. In some cases, counties have different people that are responsible for it. But a lot of times, that is another thing that we'll end up finding out through the treasurer, is information about their tax sale. But we can also learn, a lot more from there. If he is the one that issues the tax sale, then we're going to spend a lot of time there going through the lists and the instructions. It's also where we're going to be able to get the forms for it. But when we're looking for any kind of history related, if we're looking for records related to the payment of property taxes and historical valuations, taxable values, then that's stuff we're going to find also in the treasurer's records.
Yeah, well, and they may have different names. They could be the tax collector, the treasurer's office, the tax claim bureau. It's who's ever in charge of collecting the property taxes is most likely going to be the one that handles the sale. Now, if for some reason they don't handle the sale, they'll usually be able to point you into the direction of where the sale is, what department's going to handle the sale.
Yeah. Now, the other office we're going to be using here, when we go to a county website, will be the assessor's office. The assessors, when we're going to go through and research the assessor's records, there are a number of different things that we can determine through county records. We can really figure out just about anything about a property related to improvements or related to the land. It's really all about how the records are divided up.
Yeah, well, this is where we're going to find out the assessed value, the legal description, the site address, any type of sales history, the owner's information. In fact, a lot of them will have links to additional information, even like the deeds.
Yeah. Now, the way that we're going to be able to access, and really one of the most important tools that we're going to use when we get to a county website is something called a parcel search tool. This is how we navigate record searches, and you could call it a search tool in general. I think in terms of when we're doing the legal searches, we can do legal searches through the recorder's office. But when we're doing parcel search information, it's going to pull up a box just like we see here on the left, where we're going to have the the ability to search for records under under a number of different things. We like using parcel numbers when we can because it's easy to plug and play.
Yeah, and we're going to get this directly off the tax sale list. So we're going to be able to grab the parcel number. We may also be able to look it up using the owner's address, the street address. So sometimes if we ever have a problem not being able to pull up the property with the parcel number, we'll try to look it up by using maybe the street address or the owner's information and find out what the property is that way. That way we can get to see how they have written the parcel number. Because when you're using these parcel search tools, and it's kind of a quick thing to add, is this every parcel tool is a little bit different. And so some of them are going to require dashes between the parcel numbers. Some of them you need to delete the dashes and have all of the numbers together.
Yeah,
and true. So that can totally change how how easy it is to look up the property information using the parcel number.
Yeah, it's not uncommon to paste a parcel number in and for nothing to come up.
Yeah, so
that
maybe
happens sometimes.
Maybe if I'm not able to find that, or we're not able to find that, we'll go search by the owner's name, and that owner probably has only so many properties in that county area, and then from there you can look at the property and see how they've done the parcel number, and then it makes it a little easier to search the parcel number because oh, they have the dashes or they don't have the dashes.
Yeah, so when we use the parcel search tool, which by the way, it's most oftentimes we're going to find it somewhere in the assessor's office usually. It seems like it's usually related to the assessor's records or a part of the assessor's office where we're going to find the record search tools like this. But for parcel search tool like this, it's all related to the property itself. That's the information that we're trying to determine. So it's things related to the property assessment, it's things related to the taxes, or it's maps to help us define exactly where it's located at. But it's all going to be something associated there with the property, which is where we're trying to weed out stuff that's junk and prove out value.
Yeah, yeah, absolutely. As far as the tax sale list, some will be tax sale lists where we'll be using an Excel list and look it up using the parcel search tool, like on the right. But there's also a lot of online auctions, online list. This is just an example of an online list where they'll have links that you can click on that'll directly take you to the county records.
Yeah, which if a list is online and you have direct links like that, just if you have direct links that will take you to county records, that saves you so much time.
Yeah.
It's a great tool to use.
One thing to add real quick is you can see in this parcel search tool right here, they say without hyphen spaces, then click the parcel search. So they give you a clue there on how you need to use the parcel numbers to use their system.
Yeah. Now, to give you an idea here, we're looking at a couple of different types of property assessment records, for a couple of different counties here. But at the same time, very different, but very similar at the same time. It's just, how they display the information.
Yeah, well, you can see they both have sales history information. They both have the tax history, the owner's information, the site address, and all of that basic information is going to be there. Also, both of these are going to have additional links that are going to take you back to additional information. So if we look underneath the sales information, it'll have a link there underneath the book and page, which will actually pull us up the deed to the property.
Yeah, it's true. In fact, yeah. So these are all links that we here that we could use to pull up the actual property deeds that were used, copies of the deeds that were used in these sales. That can be really helpful in telling us more about property transfers and helping us validate or verify the chain of title. If we're looking at who the past owners have been, we can actually look at the deeds themselves, copies of them. Then we can follow exactly what happened, and we can also determine things about the property, like are there easements, or is there it's going to list stuff like that.
Or something like
mortgages,
that
anything
could be listed on the deed. Also these county records, and not all of them are going to have them, but a lot of county records is links to maps as well. Now, a lot of counties have moved to online maps, GSI maps, but so there's still some counties out there with plat maps. But there is so many different counties that are now available online, and you'll be able to link directly through the assessor records.
Yeah, it has become very handy. And in fact, the nice thing about all of this is that it continues to get easier and easier to do in more and more places. The internet seems to be only simplifying the process and making it easier for more people to participate. And now it's stuff like the virus is pushing more of these companies to get their sales online, so that they have a way to be able to get rid of inventory without needing to hold a live sale.
Yeah. Now, one thing I think I forgot to mention about the assessor records is the assessor history. The tax value history, and so each one of these we can see the in both of these cases, they have land and improvements. So we can see the land value, the improvement value, and then the total value.
Yeah, something else that's important that's worth noting is, one of the things that's most time consuming as a new, when you're investing in one of these places, is going to a new area for the first time, or investing somewhere for the first time. And it's because these records are a little bit different, but they're, but at the same time that they are very similar. But reading them quickly, knowing where to find everything, you'll get much more comfortable the more you work with some of these records. And as you get very familiar with them, it becomes a lot easier. So I think that while all these records are somewhat different, the more you work with them, the faster you'll get, and that's what's going to help you save time.
Yeah, exactly. Well, in becoming an expert or proficient in going through these county records is going to be one of the best things you can do as a tax sale investor, because this is where we get all of our information. So, it can be very difficult, especially if you're not used to it, you haven't done it before, to start going through these steps. But like Shade said, the more you do it, how, you know, even within one county, once you've kind of got that hang within that area, it becomes easier. And you can take those same skills, even though the county records will be different in another area, you know, the process is going to be the same. So you can take those skills that you learned within that one area and, you know, adjust it in the next area you search.
Yeah. Now let's see here. Now, again, we're going to use these records to do a couple of things here with properties. You know, part of what we're trying to do, and by checking this information, is we're trying to determine what the property value is, and you know, to make sure that it has that use and value. And part of the way we can do that is through what the county's estimating the property to be worth. You know, and we can also do that partly through historical sales. You know, knowing you know, what it's sold for in the past, you know, is important and can help us in determining the value of the property. But we're also looking for things that can point to the fact that maybe this property has problems. You know, maybe there's some kind of an issue with it. You know, that we're going to be looking for, because again, with tax sale properties, they don't always come out and tell you, well, what's wrong with them.
Yeah.
You know, we've got to dig into this a bit in order to define that sometimes.
So once we've gone through the assessor's records, then we're going to research any type of maps, Google Maps and county maps.
Yeah, maps are a fantastic add-on and feature here, especially with so many of the online tools that we have today. If we can get map imaging of the property, you know, it's going to make it a lot easier for us trying to find comps and also determining precise value.
Yeah, well, also with you know, the county maps, it gives us the opportunity to look at the county lines, you know, see where the property lines are, and see where the property lines are in relation to the other properties on the street.
Yeah. Yeah, in fact, yeah, oftentimes, you know, that's how we have to figure out or determine exactly where properties are is from overhead views, you know, and working our way back sometimes. Fortunately, though, we also have things like Google Earth and Google Maps with street side images on lots of properties across the country. And so oftentimes we can even get a street side image if we can determine, you know, the precise street address for the property.
Yeah, in fact, we'll have both maybe Google Maps and the county maps pulled up and you know, compare the building lot or the home or the property from the satellite maps through the county to the Google Maps as well, because to see what changes have taken place, you know, make sure they look like the same property. And then like Shade mentioned, a lot of these areas will have street side views where we can at least get an idea of what the property looked like and when that photograph was taken. Now, if we're buying structured properties, at least with tax deed investing, we're not going to count on that street side that street side view, but we probably would accept that as evidence with the tax lien certificate.
Yeah, with the lien, it would be all right. With the deed, we need to have somebody do an on-site evaluation so we can, you know, determine the current condition of the property. Because, you know, ultimately, you know, we are talking about, you know, acquiring the property outright. But for liens, definitely we could do it, you know, with just looking up to see what the property is. You know, sure, no problem.
Yeah.
You know, also just something that's worth mentioning too is that, you know, sometimes we have people that ask us, you know, they'll say, you know, how the properties don't have an address. You know, we get, you know, that's something people say all the time. And it's actually one of the reasons why we'll pull up and use the maps early on in the process, and that's so we can determine precisely where it is, even when there's not an address. If there's not an address, what we'll do is we'll use their map feature to find the closest cross streets, and then we can go into something like Google Maps and using the cross streets and see if there's a view there. We can get the closest thing to a physical address, or we might use the address of one of the neighboring properties, you know, to find. We might pull up valuation information when we're looking for comps, you know, there to see what the neighborhood, you know, to see what's going on there in the neighborhood or what other properties are listed for sale.
Yeah, in fact, really a bunch of these different steps, we actually do entire trainings with our membership program on the topic of researching the assessor records, you know, or, you know, researching and going through and how to find the court records. Now, If we're investing in tax deed properties, that means we're going to own the property after, once we've purchased it. And so because of that, we're going to research for any type of governmental liens on the property within the recorder or the clerk's office.
Well, yeah, when a property goes through a tax foreclosure, that is a special type of foreclosure. I mean, it's a real foreclosure, when you really look at it. But it wipes out or extinguishes any kinds of liens or attachments that there are with the property. So for us, the one thing it can't do, though, is it can't wipe out, let's say, another government issued lien. So we're not worried about something like a mortgage being attached to the property in most any of these states that we invest in. We're worried about there being some kind of a lien against a property that we're unaware of that may still have validity. And if it's a government issued lien, like let's say some kind of a nuisance lien or maybe like a grass cutting lien, then we could be on the hook for that if we were to buy the property. So we want to find something like that before we buy.
Yeah, absolutely. So with the tax lien certificate, this is probably not a step that you're going to need to go through, because with a tax lien, 95% of the time they're going to redeem. You're not usually going to get the property with a tax lien certificate. So we don't really need to get in and look at things like mortgages or the liens on the property. But like Shade said, we do need to be aware of governmental liens when we are looking for when we are buying tax deed properties. And so we're going to go and look for usually the recorder, the clerk's office. It could possibly be the court, but we're going to look for a place where we can search the records.
Yeah. In fact, to do that, we're normally going to be going to the county recorder's office, clerk of the court sometimes, but a lot of times it's going to be in that office that we're going to find those types of records. We're basically looking for the office that handles the recording of any mortgages, liens, judgments against properties. And the reason why we want to find those records is we're actually looking for another record search tool. Just like we were talking about earlier with the parcel search tool, and that was for the property records. What we're talking about here is for the legal records.
Yeah, absolutely. So as far as searching the court records, we're always going to check to see if they have the records online. Now, not every county in the country is going to have these type of records, but there is a lot of counties that are adding this information online and making it available to the public through their public searches. Because these court records are public records. So anyone does have access to them, but that doesn't necessarily mean the county has to make them available online or give them to you even by calling them. But these are the two options that we're going to try to research them.
Yeah, if you were there in person, you could always access them. But fortunately, more and more counties now are putting things like their legal records and their court records online because it makes things easier for them, and they don't have to pull the records from people. People can pull the records themselves, and that's really what we're looking for here online. Is anytime a lien is issued against a property, it has to be done through court proceedings. If a property is foreclosed on, even by a mortgage company, there's going to be court proceedings for it.
Yeah.
The court proceedings can tell us a lot about the property, and more importantly, there's always a record of every court proceeding, and so we can go through and look through county court records and find, we can find things like liens have been placed against properties, but we're going to be searching according to names.
Yeah, absolutely. We're going to take the property owner name, and that's what we're going to be using to research any of these court records. So if we're able to do the search of the name online, then that's the way that we're going to do that. If they don't have an online search, then it's worth giving the county a call and seeing, do they have a process that you can pay a fee and they'll print you off and send you copies or anything like that, and see if they have any of that information available and are willing to give it to you.
Yeah. If we once we know what the property owner's name is, then we're gonna put their name into the search field, and look for any legal records that are related to them that look like they could be something for us to be concerned about. Like for instance, you can see liens that are issued. And then we're going to pull it up and read it so that we can see if it is related to the property in question or not, because we need to validate that aspect of it as well.
Yeah.
So if we can validate both those aspects of it, then we know that there is for sure some kind of lien against the property because we found it online.
Yeah, definitely.
We found the legal record of it. But yeah, if they don't have any of that stuff available, then really we're kind of at the mercy of the county. You can call them up is probably one of the best ways to do it, and they can help us through the process.
Yeah, see if they're willing to help. Someone may say, hey, you need to be here in person. If that's the case, then you can decide what to do.
Yeah, that's why sometimes people have title searches performed by companies.
Yeah,
because the only way somebody can do it is if they're in person and can go through the records in they're at the county.
Yeah, really. Well, it's a good question is when to get a title search. And really that's going to depend on the purchase price, how much you're spending on the property. Is the more money you're spending, especially, and we're only really going to get tax title searches, I guess I should mention again, with tax deeds, not with tax liens.
Yeah, no, you wouldn't have to worry about it with tax liens at all, but with tax deeds at some point, getting a title search could become justified.
Yeah, absolutely. If we're not able to research the records online for whatever reason, if we're going to be spending a significant, large amount of money, then it could make sense to get a title search. But when it does come to a title search, really what we're looking for is not a full title search or,
yeah, we don't need everything that a full title search performs.
No.
It's far more extensive than we really need for our purposes. We're primarily interested in a lien search.
Yeah, a lien search, a lien report. We just need the liens that are issued on the property. And so when you are talking to a title company, be sure to say that, because that's going to be a lot less work, and that means that it should be a lot cheaper. So if a full title search is $300, maybe a lien search is $100.
Yeah, we're basically going to use that information to to determine and try to evaluate if there are any other risks there with the property. Something like a lien there is not really a risk, especially if we know about it, we can account for it. What we're worried about is buying something and finding out after we buy it that there's something attached to it.
Yeah, exactly. Step 8, potential risk. And so with tax lien certificates, the number one risk is, well, I guess not the number one risk, but one of the big risks is underwater roll-up.
Oh yeah.
Or what we call underwater roll-up.
Yeah. In fact, that is a potential risk when you're looking to buy tax liens, and the reason for that really comes down to liens and how they work. If liens are placed against property, they prevent the transfer of ownership. And as a lien holder, the way that you get paid back is either by that lien redeeming, or which that happens most of the time. People end up paying off their taxes. So it's from it redeeming and you earn your rate of return, or if it doesn't redeem, it's about using that lien to foreclose on the property and taking the property instead. And so with underwater roll-up, the risk is that you could buy a lien against a property that has so many other liens against it that it's not worth paying, because you'd have to pay more for it than it's worth.
Yeah, absolutely. And so when we're looking at any potential risk, in addition to that, we're going to look at any type of low value property, any type of landlocked property, useless land. But if it's a structured property, one thing we're also going to do is we're going to have an on-site evaluation if we're talking about a tax deed. So we're either going to look at the property ourselves or send somebody out there to get current photos of the property, because that's really, when we're talking about buying structured properties or structured tax deeds, I should say, that's really the number one risk, is the condition of that property. So
yeah, like tear downs are a huge risk, for tax deed investors. it's buying properties that that need more work than the property's worth. One problem is let's say that a property is only valued at 70,000 or or $80,000, and and maybe you can buy it at the deed sale for $1,000 maybe, but that's because it needs so much work. Let's say that that it needs $100,000 worth of work. The problem is digging into that. No matter what you do, it's never going to be worth more than that $75,000.
Yeah, absolutely. So when we're talking about buying structures, that's going to be a huge risk, is that condition. Now with land, it's just really a bit of common sense can help you avoid a lot of the dumb properties. I mean, if you're looking at a property and it's 15 feet by 150 feet, it's probably not going to be very usable type of property. But if it looks like a nice building lot in a subdivision with similar type building lots, well, that's going to at least give you some clues that it's probably a similar building lot, a normal building lot.
Yeah, that's why we're always looking at the shape, of the lot and how it compares to the other lots around it. It's one of the ways that we can identify useless land. If we're buying raw land, then that's one of the ways that we can identify it. Or we're trying to also make sure that it is accessible property. That's one of the things that a property needs to be in order to be usable, is it needs to be accessible through public roads. And so we can verify that, that it's accessible as well. These are all things that help us to prove and validate that the property has use and value, which is what we want to make sure before we make an investment decision. And also, allows us to watch out for, for some of these issues, or weed out things like junk properties. That's how we weed out junk properties, is by checking this stuff, to make sure that the property we're looking at is, doesn't have one of these problems.
Yeah. Another risk with tax deeds is those other governmental liens. Now, we've researched them in the step before when we were researching the court records, looking for those other governmental liens. But like we mentioned before, the reason is because, something like a city nuisance lien, even a state lien or an IRS lien can stick to the property. And so before buying the property, we're going to want to research those governmental liens to make sure that there isn't any, or if there is any, we know how much they are and then determine that into the cost of the property.
Yeah, it's not a problem if you can account for it. It's really only a problem if if we are unaware of it.
Yeah, and really the IRS lien is really the less risky of the bunch, because really with an IRS lien, we're just going to be sending them a notice that we've purchased the property. They have 120 days to respond, and they'll either release the lien or take the property and pay you what you paid for it. In most of the case, the IRS doesn't, just goes ahead and releases the lien.
Yeah. The next step there is we're going to determine the property value, which we're going to do based really on comps more than anything, but we're going to use all the county's information to validate and verify that. But once we're able to locate a property where it's at, finding comps is generally pretty simple.
Yeah, so for tax lien investing, this is probably going to only require looking at the assessed value and maybe, looking at an online value website like Zillow as well, just to back it up. So if let's say you're looking at a home, you look at the assessed value and then you check to see what the Zillow value is. Really, if everything looks good, you can go ahead and pull the trigger on a tax lien certificate like that, because everything seems to make sense.
Well, a lot of times all you really need to know would be just the lien to value ratio.
Yeah.
And so in most cases, you're going to be talking about liens that are for a single year's worth of taxes, and most property tax rates are not overly crazy. And so we're generally not talking about about amounts that are that big.
Yeah, so with tax deed investing, then that's going to require more research, where we're going to be doing a comparative market analysis, what's called the CMA.
Yeah, which that's where, because we're looking to buy this property and sell it, we need to really accurately know what the value is. And the only way we can accurately know what the value is if we can find other examples of properties that have sold recently, currently listed for sale to kind of help, to help us determine that and approve it.
Yeah. So as far as finding some of these comparables, there's lots of different areas that you can find them. Zillow, Realtor.com, really any of those property value websites. What we're looking for is for properties that have that are currently listed for sale, properties that have recently sold. We can also use the county record information because a lot of counties will have the recently sold property. So you can actually go and look at properties that have sold within the county through the county records themselves.
Yeah. In fact, let's see here.
So
let's take a look.
Yeah, as far as getting those comparables, then we're going to go ahead and do a comparative market analysis. And that's the formula for that is really to determine the dollar per square foot by dividing the sold price by the square footage.
Yeah, so if we're dealing with improved properties like a home, then we can do a dollar per square foot on the the property improvements, and a lot of times that will give us some pretty accurate numbers. It also works with land just fine as well because we're dealing with a certain number of square feet.
Yeah, exactly, or similar sized lots or anything like that.
Although one of the things though that does change is land values can vary though, as we get in different cities or even communities. So we have to be aware of that as we're looking at comps, how they vary in places, and consider that when we're trying to determine or set a value for a property.
Yeah, absolutely. Well, getting properties as close to the property that you're looking at is going to be important. But here we can see there's 3 similar homes to the example home being a 3-bedroom, 2-bath, and they sold for $55 to $62 a square foot. So if this is the house that we're looking at, this 1,800 square foot home, we'd know, hey, well, our home or the home that we're looking at is valued anywhere between 55 to 62.
Yeah. So, it's going to be somewhere in that range, and we can be pretty safe about that. It's based on current comps.
Yeah, absolutely.
Once we know what the value of the property is, it makes it a lot easier for us to set our bid, our maximum bid, because it's probably going to be based on percentages.
Yeah. So as far as tax lien investing, this may be only the interest rate you're willing to accept. So if we set a max bid, let's say we're investing in Florida and we say we're willing to go to 10% or 12% or whatever it is, then we're setting the maximum bid. Even with premium bid and tax lien certificates, it's pretty easy to kind of figure out what you're willing to accept and then stick to that.
Yeah, with deeds, it's going to start off at what's owed in taxes, penalties, and fees. So that's generally going to be multiple years worth of delinquent taxes. It's just a matter of state law setting how many years it's going to take in delinquent taxes before they can foreclose. So opening bids might be 10 or 15% of the property's estimated value or less in a lot of cases. And how we bid on that, well, again, our maximum bid is going to be based on how we plan to sell it and our estimated profitability.
Yeah, what we use is what we call a bid to value ratio, which is just what percentage of the property value are we willing to bid up to. So is that 10%, 20%, 30%? Usually we'll try to stay below 50% for tax deed properties. Now there is some properties that could make sense to pay more for that. But obviously, the cheaper you can get the property, the more profitable it's going to be.
Yeah. There are, and I think that for the most part, you can find tax deed properties all over the country for 50% and less. There are some places in the country where it gets competitive and it goes, it gets up above that in some places. But throughout most of the country, you can get excellent tax deed properties for well under 50% and sometimes for much under.
Yeah, I mean, there's, we have students that buy property for as little as 10 cents on the dollar, even less. This property here, has a similar type. This is actually a home that was picked up for 8,500, had a value of around 89,000. Which is around 10 cents on the dollar.
Yeah.
Here's just another testimonial from one of our students, Valerie, and she talked about a property that she was able to sell, and she set it up with a down payment that covered her cost. Now she's receiving 100% profit each month off of selling the property through seller financing.
Yeah. In fact, which is another way you can bring in fact, very easy way you can bring in monthly residual income is through seller financing land.
Yeah. So as far as the 10 steps, those are the 10 steps that you're going to go through in researching tax sale property. Here at taxsalesupport.com, we have several different services to help with additional or advanced training.
Yeah, in fact, one of the things that we have coming up is going to be another one-day online workshop. We did this actually a number of months ago, and it worked out really well. We were really happy with it, and we've had a lot of requests from people that we put on another one. And
I think it's December 12th. Is that what we're
yeah,
thinking?
I think that is the date that we've got set up. It's on a Saturday. And I think it is on December 12th. And so again, it's what it is an online workshop that you can attend that's inexpensive.
Yeah. Well, really it came about because of stupid COVID. We haven't been able to hold our 3-day workshops where we get to go out and meet our students and our members. And so, because of that, we set up the 1-day online workshop that we conducted a couple of months ago, and it was really a great event. The students loved it, and the people that attended. So we're thinking about setting up an additional one, but this second one is going to be a little bit different training than we taught in the first one, because really we're combining 3 days worth of training. And so there's only so much you can do within 1 day. So the second one will hit some of the same parts, but actually do a lot of new stuff.
Yeah, it'll be a lot of new training there from even the first time we did this. We're probably gonna we've got so much content from 3 days, that we can change it up quite a bit.
Yeah. Now, if you haven't checked out our membership program, it probably, at least we think it's the very best value in tax sale education, because it's $39 a month. We offer a 30-day money-back guarantee. You can cancel at any time. And so that's going to give you access to really all of our training manuals, over 1,000 pages of our manuals, weekly webinars with Shade and myself, and all of our list and all of the training that's included with our membership program.
Yeah, it is. It's hard to beat that deal, and it simplifies the process quite a bit when it comes to gathering or getting the lists, knowing what's coming up. Plus, you can always hop on the webinars with us. So, thanks for joining us this evening. If you're interested in any of those future trainings, you can find out more on taxsalesupport.com. You can go to the website, and we'll have more information. But yeah, I think you're right. It is December 12th on the 1 day that the online workshop that we're planning on. If anybody would like to attend that, we'll get that information up. And we'd love to see you there.
Yeah, absolutely. Thanks again, everyone. And one thing I'll mention is that everyone that attended, you guys have qualified for a strategy call with one of our coaches. So we'll go ahead and send you guys out an email with a link if you'd like to set up a time to do a strategy call.
Yeah, absolutely. And doing so, we can kind of help you figure out, what the best thing to do moving forward to be.
Yeah, absolutely. Get you pointed in the right direction.
Yeah. So, hey, thank you so much again for joining us tonight, and have a great evening. Everybody keep yourself safe, and God bless.
Yep. Thanks again.